the expected S&P July decline is likely to be a minor pullback. Today is July 7th, 7:07, and we are making a forecast about the short term, and I'm also going to put it in context of the larger story. Because the market's been obviously extremely bullish, and it's been bullish most recently for at least 2 years, back into October of 2022. And we have been saying that the bull market will continue after a pullback, and we expected initially the pullback to be large in July, but recently we researched and found that the probabilities have changed, that the market's likely to continue to be higher until mid to late August, and then have a meaningful decline from August into September, okay? And that represents about as big a pullback as we're going to have this year. After that, the market should rally. It could stay down into the election and then rally into the end of the year, and we expect further highs next year, okay? So this is the story. We found a 13.09-year cycle, which has been repeating extremely well. Actually, you can see in this picture, it's been 92% accurate for the last 12 months. And this is what it does going forward. It has a pullback in July. It's not a huge one, but it does go down, and it goes down until the 25th or 26th of July. And then it has a rally into late August. Actually, it had two tops. It had one around the 15th of August, and another one around the 25th of August. And then it fell pretty hard between August 25th and September 12th, okay? And that's, if there's going to be a big break, that's probably where it would show up, okay? Now, what's interesting is 2 times that cycle, 26.18 years, does the exact same thing. And you look at the two of them, you can't even tell which one's which. They both indicate a break late August into mid to late September, and then a potential retest in the period of the election, okay? After which they both go up, as you can see in these pictures. Now, this is also reinforced by the short-term work that we did. We found that the 5-month, it's actually 5 lunar months, it's a little bit less than 5 months cycle, has been repeating extremely closely what happened 5 months ago. And it also indicates, in the short term, we have a correction. It has a low around the 15th and another one around the 23rd of July, but it's not a big deal. It could be maybe 1.5 or 2% that it goes down. Then it goes up again in August, and then it also has a break from the 15th of August down into the middle of September, which lines up with the larger cycles that we had found, okay? And we also found a 13 lunar month cycle, which agrees exactly with the 5 lunar month cycle. So we have 2 short-term cycles, and we have the 13 and 26-year cycles, all speaking the same story going forward into the end of the year, okay? Along with that, I wanted to talk about the very big picture. We know that Jupiter has moved into the sign of Aries, last year, and to Taurus this year, both of which are bullish for the S&P, and it stays there until next April, okay? So we looked at multiples of 12 years ago, and it turns out 24 years ago is an extremely good match to what's happening this year and for the last few years, and you can see that in this chart. And 48 years ago, which is twice 24, which is 4 times the cycle of Jupiter, has also been extremely good the last 3 or 4 years going backwards, and it also forecasts a very similar future for the market. Now, the 24 and 48-year cycles, multiples of 12, also agree fairly closely on the next few years going forward. The 24-year cycle actually makes a high this September, the equivalent of this September, works its way down into February of next year, has a sharp rally until May of next year, and then the bear market is in full force, okay? So according to that, the bear market would start in May of 2025. The 48-year cycle is even a little more bearish, but it's more gradual, and it also could be seen to have kind of holding up until the middle of next year. But the granddaddy the one that you can most trust, the most important cycle driving the stock market, which has been highly correlated for decades, is the 60-year cycle. And that 60-year cycle, as you can see, is very, very similar to the present market the last few years. And here's a picture that you can see that relationship. And this is what the 60-year cycle does going forward. And we can see a relationship between the 24-year cycle here and the 60-year cycle. And we can see a relationship between the 48-year cycle and the 60-year cycle. And based upon that, what we see is the high is likely to come in either in May of 2025, or the 60-year cycle would actually keep the market up until February of 2026. And then the interesting thing is all three of those have a low that would come in March or April of 2027. Okay? All three of them, they have slightly different paths forward, but they all agree on the final low in the bear market would come in early part of 2027. So for long-term investors and for swing traders, it's very important to recognize the 13-year and 26-year cycles are at the swing trader level. The 5-month cycle is more for a short-term trader level, not quite day trading, but nevertheless it's for very short-term swings, and you can see the fluctuations overlapping between the 5 lunar month and the 13 lunar month cycle. And they agree pretty closely that we work down for a few weeks and then we work back up into the middle of August to late August, and then we come down hard potentially in September. So we have all those things agreeing. Also, you note the year 2000, of course, is 24 years ago. It was an election year. And you notice the market made a high at the end of August, early September. It fell down pretty hard, actually, into October. And it didn't really rebound that much and actually went down again into February. So it was almost like a downswing from February, from September all the way until February of 2001. But then it had a really sharp rally into May of 2001, which we expect to be reinforced by the 60-year cycle high and potentially other shorter-term influences. Okay. Then, starting in May of 2001, the market collapsed into the 9/11 event in September of 2001, but it had another very strong rally into early 2002, which would line up with 2026. So it's possible we have a big break in 2025 and a big rebound into 2026, and then the final leg of the bear market goes on from 2026, accelerates potentially as the 2002 market did into 2027, as the 2002 market made a low in March of 2003. I wanted to emphasize that this decline in July is not necessarily a big deal. It's also important not to short a super strong bull market. This market is extremely strong, and if you do short it, you might get away with it for a week or so, but it isn't meant to be a time to go short. It's better to wait for a pullback or a secondary top to go short rather than trying to catch what they call a falling knife. If it were a bear market, it's the same thing. Instead of trying to short this market, it's better to continue to wait for the low points, the cycle low points, and buy pullbacks. So buying in mid to late July is more reasonable and less risky than trying to go short on July 5th, even if it does go down. All right, but one more thing. It's been mentioned that, we need to have some of the people who are trying to use our signals to trade, that the stuff may need to be more actionable. And the truth is, these videos, which are coming out every 10 days or 2 weeks, they are not meant to be exact, and they're not meant to be necessarily trading directives, okay? What we have, however, is a specific set of tools that we have on our website. One of them is the Matrix Channels lines. That is meant to be a very, very helpful tool for people who are trying to use this information to trade. And it's also, that can be used on a short-term basis and on an intermediate-term basis, okay? We also have, of course, the course that we teach, and many of our students are taught many techniques that are proprietary and that they can use to trade along with the cycle work. So in situations, there can be situations where they're getting in and out when the cycle is up and they're going short anyway. So it's very important to know we have a variety of tools available through our programs. and that these videos are not meant to be relied upon exclusively to be making trades.